I'd rather be with a guy with an IQ of 130 who thinks it's 128 than a guy with an IQ of 190 who thinks it's a 240. The latter will get you into a lot of trouble. Hello everyone, welcome to Just Invest Today. And today we're going to be talking about 4 reasons why IQ is not important to become a successful value investor. Warren Buffett, Charlie Munger, Lee Lu have said this multiple times that to become a successful value investor, you do not need a high IQ nor experience. What it all comes down to is temperament. Yes, temperament is what makes you a successful value investor. And in today's video, I'm going to go over 4 reasons why. So the first reason, the number one reason is that you have to have an independent mind. So this all goes back to what Lee Lu said. Lee Lu wrote a whole article about this, why he agrees with Warren Buffett and Charlie Munger on this. And having an independent mind is going to make you a very successful value investor, because thinking independently, going counter what the majority, what the herd thinks, is how you're going to make the big money in this game. Because think about it. Are you the type of person that you need validation from other people to make your judgment or to be happy with what you got? Say you bought a product in the store and you show your friends. Do you need your friends' validation for that product for you to like it? Or can you just buy this product and be happy with it no matter what other people said? And what other people say about it, whatever people criticize about it, are you going to be happy with your purchase? And this is very key, because in this market, in the stock market, there's going to be so many people giving their advice, giving to you all this information about the stock. But what it really comes down to is how you think about the stock, how you interpret the information, and you come to your own conclusions. And there's going to be so many people trying to tell you this stock is bad, this stock is not good, it's undervalued for this company is undervalued for a reason. And you got to go against that grain sometimes. You can't just think what other people are thinking. And if you don't have an independent mind, if you can't come to your own conclusions, you're just going to be influenced by all that chatter, and you might do the wrong thing. So number one, having an independent mind is very important to become a very successful value investor. Number two, you got to be objective and unemotional. I know, guys, everyone is emotional, everyone has their own issues, but in value investing, you have to be able to control your emotions, and you got to be objective. Guys, this whole name of this game of value investing is trying to predict the future. So you got to be objective as possible when you're trying to predict the future, because the future is very uncertain. So when you're objective about your conclusions and you're not emotional about your results, you're not like, you don't stick to a company just because you're emotionally attached to it. And that's sometimes the problem with a lot of these companies. You get so emotionally attached to it, you think it's your baby, and you don't look at it, the stock, as being objective. You don't look at the stock objectively, meaning that a problem can come up, something can happen, and you're so emotionally attached to that stock, you're unwilling to let it go. But if you do your analysis, you're objective about it, you can see the faults of that company and you can see the good things about that company. So you got to be very objective about the future, and you got to be truthful about it. Don't come too attached to your stocks or to your investments, because later on that can bite you in case there's problems that come up or there's some huge situation and you think that this is your baby and you don't want to get rid of it. But we got to come to our objective conclusions about the stock, about the future of the business, and make sure you are objective on that. And where you see this company, where you're objective about the management and what's going on and what they're doing, because this can very well hurt you into the future. So you really want to be objective about your businesses that you buy, analyze everything, and you predict what's going to happen as best as you can. You come to your conclusions, and if they're wrong, you let it go. You don't get attached to it because you did so much research and you love the company. You're not attached to it like that. If the company is bad, it's bad. If it's good, it's good. You got to be very objective with your investments. So guys, so that's number 2. The third attribute, being very patient and decisive. Guys, there's going to be lots of times in the market where you don't make an investment for a long time because there's no opportunities in the market. Value investors do not play their short term. They look for that one big hit, those long investments where they can put their money in and see it grow far into the future. But they look for that attractive price. And sometimes the market does not present that opportunity. So they can come out with years and years of not investing into the stock market until they find that one opportunity. And that's how patient you gotta be. But on top of that, when you see that opportunity, you have to take it. You gotta be decisive. You don't tiptoe into that stock. You gotta put a good 20, 15, whatever percentage that you have, you gotta put it into that stock. Because these opportunities don't come often. You gotta understand the bull, bear market, these short-term trends in companies, how sometimes companies can have these short-term problems and come back up really quickly. We saw it in the March in 2020 when the whole pandemic happened, guys. Stocks went down so quickly. So you got to be prepared to put your money in, be very decisive, but you also got to be patient. Moshe Prabhat has said so many times, guys, making one investment a year, that's successful. That's huge. How many people do you know that can be that patient and only make one investment per year? So, guys, you got to think about that. Lee Lu, he's been Charlie's partner for 16 to 17 years plus, 20 plus years. He said that Charlie Munger has been reading the Barron's looking for stock picks for 40 to 50 years. In those 40 to 50 years, he's made one investment into one company after reading the Barron's just to find stocks. He's only made one investment the whole time. That's how patient Charlie Munger is. And when he was that patient, he was decisive. And when he found that stock, he bought into it and it made like 5x his money. And that's how patient you gotta be. You gotta find these opportunities, be very decisive, buy into that company, and you'll see strong gains, guys. And if you don't have this type of patience, it might be hard for you because you're going to be chasing a lot of these short-term plays, short-term activity in the market. It's almost like gambling if you're just doing these short-term plays. You're not investing in this long-term mindset. So, guys, you got to be very patient and decisive to become a successful value investor. And last but not least, you got to be passionate about business. And the thing that drives Charlie Munger and Warren Buffett is that they're passionate about business. They can go 40, 50 years of just studying business, looking at companies, and they love it. They enjoy it. And that's what's going to make you successful because you're going to start seeing stuff that you never seen before. You're going to start learning a lot about investing. And that's amazing thing about investing, that you're continuously learning about different businesses, how they operate. And when you have that passion about the business, you're going to be answering these questions, like these questions that come up, like how is this company making money? How is it sustaining its competitive advantage? Is the competitive advantage durable? Where are you going to see this company in the future? Is it going to be in the future? You're going to be wanting to answer all these questions. You're going to go deep in the company, find out all about these questions because you're passionate about that business. You're passionate about learning about business. And with that, you're going to brighten your horizon of your circle of competence. So being passionate about business, you want to know more about business and how it runs and how it operates. You're just going to know more about that company and you're going to invest in that company with more confidence, with more understanding. And when you understand that business, you can kind of predict the future more accurately. Even though it's not perfect, you can kind of come to a strong conclusion in your mind at least about the future and predict it with more accuracy. If you understand the business, you know how it runs. So being passionate about the business or businesses or be passionate about anything that does with that sphere is going to help you a lot in investing. And that's why IQ is not important. If IQ was important, every smart person would be a millionaire. Guys, there's stories of Newton investing in the South Sea bubble that crashed like crazy and he lost a lot of money. Newton's one of the smartest people and he even fell to the speculative mind, guys. People with a high IQ, they don't rely on their patience being unemotional. They think they can time the market, they can use fundamentals with technical analysis, that they're smarter than the market, they're smarter than the other people. And that's what makes you fail. That makes you like not become a successful investor. And that's why these high IQ people think they're the smartest, the brightest, but that's not what makes you a lot of money, guys. It's about being patient, investing in the long-term future, not worrying about the short term. So guys, tell me about this video. Did you like it? Is there any more advice you can give to value investors? Guys, if you like this video, like it, subscribe to my channel. I'll get back to you in the next video. Peace.